The global economy may be on the verge of a dramatic shift, with past financial crises aligning to signal an impending storm. Ray Dalio, the legendary investor, predicts a potential crisis within 1 to 2 weeks that could impact everyone. Are we prepared for what's coming? Ray Dalio has made headlines with his stark prediction that a new crisis could strike within 1 to 2 weeks, potentially affecting people across the globe. To understand the depths of this warning, it's essential to explore the factors that Dalio believes are coming together to form a perfect economic storm. At the heart of his analysis is the belief that the global economy is facing an unprecedented convergence of risks, each of which has the potential to disrupt financial markets, businesses, and everyday life. The central concern in Dalio's prediction is the fragility of the global economy, which has been on the edge for some time now. This fragility is linked to the long-term debt cycle, which Dalio believes is nearing a breaking point. After years of low interest rates, rising debt, and government intervention, the system is stretched thin. But what exactly does this mean for the next couple of weeks? Could it be a sudden spike in inflation, a dramatic stock market crash, or even geopolitical instability that triggers the crisis? The precise details remain uncertain, but the warning is clear. Prepare now. Imagine a gathering storm, dark cloud, wind picking up, while no one can predict the exact moment the rain will fall. The signs are undeniable. This is the situation Dalio describes, urging individuals, investors, and governments alike to be ready. Who is Ray Dalio and why should you listen to him? Ray Dalio is not just another financial commentator. He is the founder of Bridgewater Associates, one of the largest and most successful hedge funds in the world. With decades of experience navigating financial markets and analyzing historical economic cycles, Dalio's opinions carry significant weight. He has built his reputation on his ability to identify long-term trends and make accurate predictions based on extensive research and data analysis. Dalio's track record speaks for itself. He famously predicted the 2008 financial crisis, warning that the global economy was headed for a meltdown due to excessive debt and risky lending practices. His predictions were rooted in his deep understanding of historical cycles, patterns that he believes repeat themselves over time. Dalio has spent much of his career studying how economies rise and fall, and he has used his knowledge to guide his investment strategies successfully. But it's not just his past successes that make Dalio's warning worth paying attention to. His analysis is based on historical patterns and cycles that have been observed time and time again. Unlike many economic forecasters who rely on short-term indicators, Dalio looks at the bigger picture, taking into account how debt, political instability, and global power shifts interact to shape the future. How can individuals prepare for a crisis according to Dalio's principles? When it comes to preparing for an economic crisis, Ray Dalio's advice is straightforward. Diversify, diversify, and diversify. He has long been a proponent of building a well-balanced portfolio that can withstand market volatility. This doesn't just mean spreading investments across different stocks. It means holding a variety of asset classes that respond differently to economic conditions. Dalio advises that individuals should start by assessing their current financial situations. Are investments concentrated in one area, like the stock market? If so, now might be the time to think about rebalancing. A diversified portfolio should include assets such as bonds, commodities like gold, and even cash reserves. Why? Because when inflation rises, or when markets become unstable, these assets can help protect against losses. Imagine building a financial fortress. Just like a castle needs multiple layers of defense, your investments should have multiple layers of protection. In times of crisis, traditional assets like stocks and bonds may not perform as expected. So having alternative investments like gold or real estate can provide that extra layer of security. Dalio also emphasizes the importance of liquidity, ensuring that there is enough cash available to cover short-term needs in case of a sudden downturn. Preparation extends beyond investment management. Individuals must also focus on personal finances. Building an emergency fund is crucial, as well as identifying and cutting unnecessary expenses to boost savings. Strengthening personal finances now is essential for being better equipped to handle potential economic challenges. By taking proactive steps such as reducing debt and improving cash flow, individuals can increase their financial security and resilience, ensuring they're prepared to weather any economic turbulence that may lie ahead. Has Ray Dalio been right before? Dalio's ability to foresee economic shifts isn't a new development. He has a long history of accurately predicting major market movements. In the lead-up to the 2008 financial crisis, Dalio was one of the few voices warning that the housing market bubble would burst. He correctly identified the unstable nature of subprime mortgages and the dangerous levels of debt accumulating within the financial system. But Dalio's insights aren't limited to the financial crisis of 2008. Over the years, he has consistently identified turning points in the global economy by studying historical patterns. His concept of the long-term debt cycle, for example, has been used to explain major economic events stretching back centuries. Dalio believes that by understanding these cycles, individuals can better anticipate crises and protect themselves from the fallout. Though the future is unpredictable, Ray Dalio's strong track record in accurately forecasting economic trends lends significant credibility to his latest warning. He emphasizes that it's not about pinpointing the exact timing of crises, but rather being prepared for when they occur. By studying historical patterns and understanding underlying economic forces, Dalio urges individuals and investors to focus on readiness and resilience, ensuring they can effectively navigate any financial challenges that may arise. Preparation, not prediction, is key. What should you be watching for in the next 1 to 2 weeks? According to Dalio, there are several key factors that individuals should monitor closely in the coming weeks. One of the biggest concerns is the possibility of rising inflation, as central banks around the world have kept interest rates low to stimulate economic growth. The risk of inflation has increased. If inflation starts to rise rapidly, it could signal the beginning of a broader economic crisis. Another factor to watch is the stock market. Dalio has expressed concerns that markets may be overvalued, particularly in the United States. If the market begins to experience a sharp correction, it could trigger panic among investors and lead to a more widespread financial downturn. But stock markets aren't the only concern. Dalio also points to geopolitical tensions, particularly between the US and China, as a potential catalyst for economic disruption. The global supply chain, already weakened by the COVID-19 pandemic, remains vulnerable to further disruptions. Trade conflicts, natural disasters, or other challenges could significantly impact global markets and economies. Keeping an eye on key indicators such as inflation, stock market movements, and geopolitical tensions is crucial for gaining insights into the likelihood of an impending crisis. By closely monitoring these areas, individuals and investors can better anticipate potential economic turbulence and take steps to protect their financial well-being. Who will be the most affected by a potential crisis? While it's tempting to think that only investors or financial institutions will be affected by an economic crisis, the reality is that everyone could feel the impact. For example, homeowners could face rising interest rates, making it more expensive to pay off mortgages. Workers might see job losses as companies struggle to cope with declining revenues and economic uncertainty. Retirees who rely on fixed incomes may find their savings eroded by inflation. One of Dalio's key points is that economic crises tend to have ripple effects that extend far beyond financial markets. A stock market crash might start on Wall Street, but its effects can quickly spread to Main Street, affecting everything from housing prices to the availability of jobs. In this sense, everyone is vulnerable to some degree. This is why Dalio's emphasis on preparation is so important. By understanding the potential risks and taking steps to mitigate them, individuals can reduce their vulnerability to the economic fallout. While Dalio's warning focuses on the next 1 to 2 weeks, the underlying issue he identifies are long-term in nature. The end of the debt cycle, the widening wealth gap, and the rise of new global powers are not problems that will be resolved overnight. In fact, these are structural issues that could shape the global economy for years to come. For long-term investors, this means adjusting strategies accordingly. While short-term market movements can be unpredictable, Dalio suggests that investors focus on the bigger picture. Diversifying investments and maintaining a balanced portfolio is essential, but so is staying informed about global trends. Investors who can adapt to changing conditions and remain flexible will be better positioned to navigate the uncertainties ahead. Ray Dalio's warning of an imminent crisis serves as a stark reminder that the global economy is always in flux. While it's impossible to predict exactly when or how the next crisis will unfold, the factors Dalio identifies, rising debt, inflation, and geopolitical tensions, are all cause for concern. By studying history, staying informed, and preparing financially, Individuals can protect themselves from the worst effects of economic instability. Stay informed, diversify your investments, and take control of your financial future by preparing now. Don't wait for the storm to hit. Be ready for whatever comes next. Subscribe to stay updated on the latest economic insights and tips on how to safeguard your finances.